Good morning, this is Tony. Welcome back to WellPod X. Bitcoin is back above $103,000 this morning after dipping to 98,000 yesterday. If you managed to buy the dip, congrats. Unfortunately, I was stuck working in the lab and didn't get a chance to scoop up more Bitcoin and Ethereum. But hey, there's always another opportunity. Let's break down what happened in the last 24 hours causing this pullback. So the AI industry has been dominated by companies like OpenAI, Google's, and Anthropic, all of which rely on massive computing power to run their models. That's why Nvidia has been the market leader, supplying the high-performance chip these AI companies need. Over the past couple of years, Nvidia's stock has skyrocketed because of this demand. But now, a new AI model from China called DeepSeek is shaking things up. It's delivering results similar to ChatGPT, if not better, but using far less computing power. This raised a major question for investors. If AI no longer needs expensive hardware, does it mean Nvidia's dominance is at risk? And that triggered a massive sell-off. Nvidia's stock plunged nearly 17% today. That is a rare drop for a trillion-dollar company. The thing is this a real threat, or is it just market correction? So the way DeepSeek changed the AI game is that DeepSeek takes a very efficient approach to training AI model, which means that it doesn't rely on the same high-end GPUs that companies like OpenAI and Google use. This could bring to two major benefits. First, of course, it lowered the cost for the AI companies. If they don't need to spend billions on Nvidia's chip, it could level the playing field. Startup and smaller companies might finally compete with the big names. And secondly, it increased competition and innovation. When the AI development becomes cheaper, we're likely to see a faster improvement, better model, and more choice for consumers. This could be a turning point for the AI industry. So now, we need to analyze and think, is Nvidia in real trouble or not? Right now, it's very hard to say that this is the start of a bigger trend, or is it just a short-term panic? AI models need GPU after all, and Nvidia's business isn't going anywhere overnight. We have to consider these two possibilities. 1. Is Wall Street just overreacting? Are big investors just taking profits after Nvidia's huge rally from last year? Or 2. Is this actually an early warning? If DeepSeek's approach proves successful, AI company may slowly move away from Nvidia's expensive hardware. So what do we do as an investor? For AI investor, this could be a sign to start looking at new players in the industry. It never hurts to shop around. Company focused on AI software and efficiency might be the next winner if DeepSeek's model becomes the standard. As for Nvidia, this is the real test. If it adapt and stay ahead of the curve, the stock could easily recover. But if more AI companies shift to less GPU-intensive model, we could be seeing the early stage of a major shift in the AI hardware demand. For now, it's too early to say if this is just a market shakeup or the start of something bigger. Full disclosure, I don't own any Nvidia stock other than what is already baked into the ETF I own. However, I'm closely monitoring this industry, and the 17% pullback days like today make it look very tempting. I'll be sure to make update on this channel if I made any purchase. Let's take a look at today's news. The first news, Michael Saylor's Bitcoin empire just got bigger. MicroStrategy confirmed another 10,107 Bitcoin purchase, bringing its total holding to 471,107 Bitcoin, worth over $48 billion. The company is now one of the largest Bitcoin holders in the world. Saylor remains one of the most bullish figures in this crypto space, and this latest move is yet another signal that institutional adoption is still full steam ahead. The second news, OKX and Crypto.com have officially secured markets in crypto asset license in the European Union. This is a big step for crypto regulations as this license aims to create a unified framework for digital asset across the EU. It provides a clear rules, making it easier for exchange to operate legally, which could lead to more mainstream adoption across Europe. The third news, Scott Bessent has officially been confirmed as the new US Treasury Secretary. This is huge news for crypto. Bessent has a history of being pro-crypto and pro-market innovation, which could be a signal for more favorable regulatory environment for digital asset. The previous US government has been slow and inconsistent with crypto regulation. Having a Treasury Secretary who understands this space could mean clearer rules, less uncertainty, and more institutional adoption. Of course, just because he's pro-crypto doesn't mean everything will be smooth sailing. He'll still have to navigate the interests of banks, policymakers, and regulators. But overall, this is a positive development for the industry. Well, that's a wrap for today's news. Stay invested, and I'll see you tomorrow.